Good evening, everyone. Hello, good evening.
Good evening, sir.
Yeah. Welcome again to this session. Today we are doing our last class on inventory. Then we introduce another new topic. So as for yesterday, we are doing December 2021 question number 2. Let me share my screen. Then we can start. Hope you can see my screen. Yes?
Yes.
So we are doing December 2021 question number 2D. They are saying that required. Determine the gross profit under the first in, first out, and the weighted average methods. As for yesterday, we are looking at first in, first out. So, but today we are still going to look at still the two examples: the first in, then first in, first out, then the weighted average methods of inventory valuation. So, therefore, they are telling us that Hannah deals in stationery along Nasa Road. She began the month of January with 50 boxes of ream of paper costing 80,000 per box. So I told you, when you read a sentence at first, reading the second sentence gets a you just it will take you to a confusion because many things will start coming to your head without knowing what you are supposed to do. So what we do, we come here.
I can't see your screen.
He has disappeared. I don't know where he has gone.
Sorry. So they are telling us that we determine gross profit using first in, first out, then weighted average methods. We come here, we go to our workings. So we come here, we start with our question. We are going to do stock cards. So the stock card is what we need. It is Hannah stationery. So we come here. Those ones who have just joined us, we are doing December 2021 question number 2. So we've said, we come here, we say Hannah stationery. Down we say stock card. We say using FIFO method of inventory valuation. So we say inventory valuation. We are going to start as for yesterday. So we shall have here our receipts. These are the things that are coming into our stores. Down we shall have date. We have details. We have units. We have cost. We have amount. So the second thing, we shall have issues. These are the things that are coming out of the stores. Still, we shall have these ones. From there, we shall have what you call balance. So under balance, we said we shall have units and the amount. After we draw our small table, because I've seen the question is brief, then we can start. They are saying that Hannah deals in stationery along Nasa Road. She began the month of January, so we are starting in January. So here, since we don't have a date, we shall just write January. So we check that the details. They are saying that we are buying 50 boxes, each box 80,000 shillings. What I've not yet told you, please so what I've not yet told you, in case they have asked units, please go on to put that these ones were boxes of rims. Those who have joined us, we are doing December, the continuation for yesterday. December 2021, question number 2D. So even here show boxes of rims. So from there, also here, you do the same in bracket, boxes of rims, so that we don't get confusions. Then we can start. They are saying that in January, I'm buying 50. So these ones are purchases. Units, 50. Cost, 80,000 per box. Amount, is going to be 50 times 80. I get my 4 million. So I get my 4 million. Issues I don't have. I come to my balance column. I show that I have 50, and these 50 boxes costed me 4 million. I'm done with that. Let's go to our second, our continuation. On 8th of January, she purchased more 50 boxes at a cost. She purchased more 50 more boxes at a cost of shillings 100,000. When you look at this point, some people, when they were doing this number, for them, they thought that all of the 50 boxes were at 100,000. That's not correct. Because if the first boxes each was at 80,000, it means by 8, these boxes, the price per box had increased. So what we do, we come, still we write 8th January. We show the examiner that these ones are our purchases. We are buying 50 at how much? At 100,000, giving us how much? This times this, we get 5 million. We come in the balances. Since we had 50, we add our 50, we get 100 boxes of rims. We come to our balances. Since we had 4 and we are adding 5, our balance is 9 million. Are we at par?
Yes.
Yes? Okay. Those who have just joined, we are doing December 2021, question number 2. Please pay attention because you need to be attentive. Reason being, inventory number sometimes becomes simple, but when you reach in an exam, question interpretation becomes hard. But if you keep doing some different computations, then we are better to go. So we are saying that we've seen 2 purchases. These are receipts, 50-50. All of them are making 100 and they are costing us 9 million. Let's continue. You see, it was given 5 marks. They're saying that she sold 70 boxes to non-government organizations on 9th of January. What did I say yesterday? We should not look at this 120 because we as storekeepers, we are looking at issues from stores. We are looking at the cost. The things they gave me, at how much price did I cost each item in my stores. Therefore, for the sales in the cost card, we don't need it at this point. So I will come here, I write on 9th of January, I come here, I show issues. Under receipts, I don't put anything. I come under issues. I have my 70. But at how much price am I issuing this 70? Can we get someone pass on this?
The first 20 is going, the first 50 is going to be at 80, then the other 20 will be at 100.
So the first one is the first 50 Then another one, 20. So the 50 will be at how much?
80.
80. Thank you. Then the 20?
100.
100. Thank you very much. So from there, we have these two. We come on our amount. We get 50 times 80. We get 4 million. We get 20 times 100,000. We get 2 million. Let me put commas. So from there, we come here on our balances. When I get 100, I remove the 50, I get 50. When I again still on the units, I get my 50, I remove my 20, my balance is 30. I come to the balance of amount. When we get 9 million, I remove 4 million, I remain with 5 million. We come, when I get 5 million minus the 2 million, I get my 3 million. Are we together?
Yes.
Okay, so that is how we would go on to do a number concerning FIFO. So let's go to weighted average cost. Before that, we need to balance. When do we balance? On 31st of January, 20 of January, they have not given us a year. So I will say 31st of January. I come here, I write my total. So here what I purchased is this plus this, we get 100. I said don't add the cost. We come here, we add 4 plus this, we get 9 million. It's supposed to be down. Then still we come to issues. Our issues, we already know it is 70. We come to the total issues, it is this plus this. We issued 6 million. Therefore, it can easily show you that when we come to our units, when we get the 100 units minus the 70, we get, when we get the 100 minus 70, I get 30, which we had already got. When I come to my closing balances in amounts, when I get my 9 million, I remove 6, still I get what? I get 3 million. That's how I would go on to do my inventory valuation under FIFO. So from there, I normally do a small table saying determination to prove myself, determination of closing inventory. So to get the closing inventory, we start with what? We are going to have opening inventory. If we have it, we put it there, but we don't have it, we have a 0. we add our purchases How much our purchases? 9 million. When we get 9 million, we less what? We less our issues of 3 million, so of 6 million, we get our closing inventory of how much? 9 minus 6, we get 3. I close my table. I'm done. I go to determination of total sales. Total sales, I will have here my date. I have my units, what I sold. I have my cost in shillings. I get my amount, how much I realized from my sales. Since it is one item, I think it was even what we sold at once. And we sold when? We sold on 9th of January. So we come, we write 9th of January. How much are we selling? 70. At how much? 120,000. So from here, we get this times this. We get 8.4. From here, we are going to determine gross So from there, we are going to determine determination of cost of sales. We all know that our cost of sales equals to opening inventory. Those ones who have just joined us, we are doing December 2021 question number 2D is a continuation of yesterday's class. So we are saying opening inventory is one of the elements of determining the cost of sales. Our opening inventory is 0. We don't have it. We add our purchases. Our purchases, we already know it is 9 million. We less our closing inventory. Our closing inventory is 3 million. Therefore, our cost of sales is going to be 9 million minus 3 million. We get 6 million. I also put it in a table, and we are done with this. Lastly, when you look at our question, the question is saying that we determine the gross profit under each method. So We come here, we say determination of gross profit. We already have our everything. Gross profit is sales, which we already have. Our sales, we had get 70 times 120,000. We had get 8 million and 40,000. So from there, we less our cost of sales. So our cost of sales, we already have it, which is 6 million. Therefore, my gross profit is equal to 8 minus 6, we get the 2.4. So also, I've already determined the gross profit and first in, first out. Are we together?
I have an inquiry.
Who is this one?
Nambi.
Nambi, yes.
Yes. When do you give all these? Will they ask us to determine all these, or they will just tell us to determine under FIFO and we have to give all these determinations?
What we are saying, look at that question. That's why I told you it will depend on the way how you are going to arrange your work. There is no way how you are going to get gross profit when you don't have the elements that you are going to use to determine your gross profit. Okay?
Yes.
That is one. Secondly, there is no way how you are going to start getting your purchases, start getting your closing inventory when you've not drawn the stock card showing the things that came in first and the things that came in last. Are we together?
Yes.
So therefore, please, even in an exam, this will not take too much time. Go on to do the way how we are doing. If you do your own things, then you expect other results. Because now look, how many minutes have I taken to determine the closing inventory, the total sales? Just look in 3 lines, 3 lines, 3 lines. So far, all of this one takes 3 marks. That's why I was telling you the other time, you can look at the model paper and its solution. Model paper gives you how ICPAU goes on to mark. For you leaving a paper and you know that you've worked, yet that you'll find that each of the figures here, they are going to give it a 0.5, 0.5. So you'll find this one is taking 1 mark, this one is taking 1 mark, still the gross profit will take 1 mark. But if you don't do this, don't expect any marks that you are going to get under this question. I think number have answered you.
Yes.
Okay. So that is first in, first out. We are going to look at weighted average cost of inventory. We said under weighted average cost of inventory, we weigh the price of products by adding total quantity or total units of product, total value of the products you are having divided by the total units of the products you have to get an average price of each product. We are going to look at it.
Come again on that. Come again on that.
We said weighted average
Okay.
cost weighted average cost, we look at the total value of goods. Let me even put in shillings. The total value of goods in shillings divided by the total quantities of items in units. So units will either be kilograms, they will either be boxes as we've seen, they will either be pieces, depending on the way the question has been asked. So from there, let's go to our question. Still, they are saying that we've already determined gross profit under first in, first out. We are now going on average method. This is what we do. We come here, we say Hannah stationery stock card for January using weighted average cost of inventory valuation. From yesterday's class, I told you that a company cannot use both the two methods because it will bring in confusion. That's why on every number of inventory, when you look at 2017 and 2021, they're asking about the consistency, the importance of consistency. Because we said consistency helps in measuring trends, whereby when you already have your ratios, you will not get confusion. But when different methods are used, then there will be too much confusion, whereby we are going to look at here. When we use FIFO, first in, first out, our profit is 2.4. Let's see if we use a weighted average cost, how much do we get? Then we make a conclusion. Still, we put date, we put details, we put details, we put, sorry, we start with our receipts, then down, we put our date, we put our details, we put our units, cost, then amount. Are we at par?
Yes.
Okay, thank you. So we come here, we shall have issues, shall have amount, sorry, units, units. We have cost in shillings. Please don't be forgetting that. Then we have our amount. also in shillings. We come, shall have our balance, shall have a balance. In balance, we said we have units. Then we have amount in shillings. So this is my table up to here. So we can go on to put in the required information. We are starting. They said at the beginning of January, whereby we said we can use January or 1st of January, depending on how you organize your work. What we need is entry. So we are saying on 1st of January, we are purchasing how much? 50 units, boxes, at a cost of 80,000.
80,000.
Amount will be how much? 50 times 80, I get 4 million. I come to my balances here. I will have 50 and my amount, the value will be 4 million. I hope we are together here.
Yes.
Okay. We go on 8th of January. These ones are purchases. So still on 8th of January, we are purchasing 50 at how much? At 100,000. So here we shall get 50 times 100. We get 5 million. We come under balances. We shall have 50 plus this 50. We get 100. We get the 4 million we had in our stores. We add the 5 million here. We get 9 million.
90 million.
We are together.
Yes.
Okay. They are telling us that on 9th of January, on 9th of January, we are issuing 70,000. Here we don't have dividing units, no. We come down. Let me do it here. We said weighted average cost is equal to, let me put it here, total units of, sorry, total quantities, sorry, total value of items in shillings divided by total items divided by total quantities of items in units. So this is the method we are going to use. This means that at this moment, they have only given us one issue. What you do, you just get what you have in your stores divided by You get the amount you have as your balance divided by the units you have. Therefore, under the weighted average cost, if you want to get the issue cost per unit, I'm going to get my 9 million. I divide by, sorry. I'm going to come here at cost. I'm going to have my 9 million divided by 100. It means here my cost has been turned to 90,000. Are we together? Are we together?
Yes.
Yes.
Yes. Total value of items in shillings divided by total quantities of items in units. Get 9 million divided by 100,000. What we get is, since each item is 90,000, we get 70 multiplied by 90, I get 6.3. Therefore, under my balance, I will get my 100 minus 70, I get 30. Under my amounts in shillings, I will get 90 minus 6.3, I get 2.7. Are we together?
Yes.
Okay. So,
I beg your pardon on that.
I beg your pardon on which one?
How we got the 2.7.
The 2.7. We said under balances, Worker tells us that total value of items in shillings divided by total quantities of items in units. To get the cost for 70, cost per box, you get this balance of yours divided by the total, the balance of quantities. Okay?
Yes.
So you get 9 million divided by 100,000, we got 90. Okay? Are we together?
Yes. Yeah.
So get 70 times 90, you get 6.3 million. From there,
Yes.
we are going on our balances. You had 100, you are removing 70. Get 100 minus 70, we get 30. Get 9 million minus 6.3, we get 2.7. Are we together?
Yes.
This is what I was telling you. Look at this confusion. Someone who used the work and someone who used the FIFO, someone with work is saying that my closing inventory is 2.7. The one with work, with FIFO, is saying it is 3 million. So how do you conclude that FIFO overestimates the cost of what? The cost of inventory, and work underestimates the cost of inventory. As observed under this, that under work, under FIFO, the closing inventory is 3 million, but under work, it is 2.7 million. We are continuing. Our question needs growth, profit. So, for class purposes, I was showing you this, but still, this determination for closing inventory, you can leave it because you already have it here. Me, I'm just doing these ones for your own understanding. So therefore, we come here on
Sir.
31st. Yes.
Before we do the determination,
Mm,
on the conclusion.
mm.
Yes.
The conclusion, I've said that when you compare the two prices, you see FIFO is having 3 million, work is having 2.7. What does it mean? We've said that FIFO overestimates the value of closing inventory, and work underestimates the value of closing inventory. That is the conclusion I've made on the closing inventories. we are going to see on cost of sales and gross profit, because our sales, they are not affected. So therefore, please under here, when you're doing the second method, don't again go to determine your sales, because you already have your sales and the sales are not affected by these methods. So we come here, we said determination of closing inventory. We start, I have, sorry, determination of cost of sales. So determination of cost of sales. Determination of cost of sales. I start. Okay, we've not yet got the totals here. Let's get them. My totals here is this plus this, which is 100. Here it is this plus this, which is 9 million. Here it is 70. Here it is 6.3. So you see, still when we get our 100 minus 70, we are getting 30. When we get our 9 million minus 6.3, I'm getting 2.7. So we come to cost of, get our cost of sales. Cost of sales is opening inventory. I say this, I don't have it. It says 0. I add my purchases. So I add my purchases. How much purchases? 9 million. Less our closing inventory. Of how much? 2,700. Therefore, my cost of sales is how much? Is this minus this. We get 6.3. Okay, thank you. From here, we go on to determination of gross profit. So determination of gross profit, we said it is sales, which you already know. Our sales was how much? Don't again compute, because you already know your sales. This is one of the tricks of saving time in an exam. So we come here, we less cost of sales. Our cost of sales under here is how much?
700,000.
Yes. So still, when you first compare the closing, you see it was 6 million, but when you come here, it is 6.3. let's look at our gross profit. Therefore, our gross profit equals to what? Will be equals to 8 minus 6.3. We are getting a 2.1. This is how we go on to determine our gross profit. A conclusion. Let's compare the two profits and we see. Here is 2.4. Here is 2.1. A businessman asks you, which method is best for me to go on and use? Everyone needs more profits. Therefore, we are observing that the FIFO method overestimates the gross profit, and this one underestimates. The main aim of doing business is profit. We need higher returns. Therefore, if you are asked which method would you advise a businessman to use, or would you advise Hannah as a consultant to use, we shall advise her to use the first in, first out method of inventory valuation. So that is a way how we go on to do numbers on inventory. If there is no any other question on inventory, allow me to introduce a new topic. If there isn't any, okay. Any question? Those ones who have just joined us? Or for today, we try another number of inventory.
Yes.
Okay,
We
so
could do
we'll
a
try another
FIFO
number.
too.
Yes?
Unless
None.
unless the new number has a new trick.
There is no any trick under here. I've given you all. So please go on and try 2017. Go on and try the number for yesterday. It is under our 2B. I told you, you go to your classwork. All these things are there. So you can go to your emails. I think you can see my email. You go to classroom. So you come here to classwork. So you come here to question paper. Everything is there posted for you. In case you need to do some revisions, the question papers are there. Feel free to inbox me in case you feel any challenge. So for today, that is the end of inventory. Our next topic is how people normally call. We are going to write IAS 16. IAS 16, that is plant, property, and equipments. Plant, property, and equipments. That's how it is. But under here, purposely we look at disposal of non-current assets. Disposal of non-current assets. Disposal of non-current assets. So we are going to write PPE, or plant property and equipment. Plant property and equipment are tangible,
Are you sharing
non-current.
your screen? We can't see your screen. We can't see
No,
your screen.
these
I
ones
can't
are
see
your
your
notes.
screen.
I'm not sharing the screen on the notes.
Okay.
I'm dictating. Okay. Property, plant, and equipment. Are we together?
Yes.
We are saying these are tangible. These are tangible non-current assets. These are tangible non-current assets that are being used by business, that are being used by the business to generate income. To generate income. So down, we are going to write PPE, plant, property, plant, and equipment, property, plant, and equipment, property, plant, and equipment, property, plant, and equipment does not apply to property, plant, and equipment does not apply to 1. Biological assets. 1. Biological assets, in bracket, IAS 41. Biological assets. Then lastly, mineral rights and reserves. Mineral rights and reserves. So you'll find in section A, still in section B, they are asking you which of the following is not included under the property, plant, and equipments of a business. So they give you biological assets, they give you buildings, they give you motor vehicle, they give you mineral rights and reserves. So please just know that the biological assets and mineral rights and reserves, they are not included under property, plant, and equipment. We are going to write definitions under PPE. Definitions under PPE. Definitions under PPE. One is cost. Cost. We write is the amount of consideration. Is the amount of consideration. Is the amount of consideration paid. Is the amount of consideration paid or the fair value of an asset. Amount of consideration paid or the fair value of an asset. That is the cost. We are going to look at what are the components when we reach at that stage, the components of cost. So secondly, the second definition is the residue value. Residue value or the scrap value. The way how we normally say that cost minus scrap value divided by useful time. We shall look at all of those ones. Residue or scrap value. We are saying it is the value, it is the value, it is the value at which the asset, the value at which the asset should be sold. The value at which the asset should be sold at the end of its useful life. The value at which the asset should be sold at the end of its useful life. That is residual value. Useful life. Useful life. Another term. This is an estimated time. This is an estimated time. An estimated time.
Which one is that?
Useful. Useful. Is it useful? Because we've looked at the cost minus scrap value divided by the useful time. So the third one is useful time. Is the estimated time.
Is it
The
useful
estimated
life?
time. Useful time. Okay?
Yes.
Are we together?
Yes.
The estimated time the asset is to be used by the business. I'm just giving you this so that when we reach the real computation of depreciation, then someone should not go on to ask me this, and this. So we said useful time is the estimated time the asset is to be used by the business. So at this stage, that's where we stop. But on level 2, you'll have to look at value in use. You'll have to look at the fair value. You look at the carrying amount, then plus the impairment loss if it is there. A small heading. Recognition of property, plant, and equipment. Recognition of plant, property, and equipment. We are going to write for an item of plant, property, and equipment, for an item of PPE, for an item of PPE to be included in the financial statements, for an item of PPE to be included in the financial statements, the following recognition criteria, must be available. So you will not bring anything from nowhere and you say this is a business asset. There are some criteria and accounting that we follow. So one of the criteria is
So they must be what?
recognition criteria to be followed. So we are looking at recognition criteria. For example, if you say this car is from Kwano group of companies, where do you base to say that? One, there should be a probability. There should be a probability. There should be a probability that the future economic benefit, there should be a probability that the future economic benefit will float the entity from the continued use of the asset. There should be a probability that the future economic benefit will float the entity from the continued use of the asset. What do they mean? If this car that you are going to use it, are there economic benefits or any amount of money that this car will render to the business? Therefore, if it is probable that we shall use this car in generating incomes for the business, therefore, we shall consider it under our books of accounts as an asset to the business.
Pardon, sir. On the first one. Recognition.
There should be a probability that the future economic benefit will flow to the entity, from the continued use of the asset. Okay?
Thank you.
Are we together?
Yes.
Okay. The second one, which is the last recognition criteria, is the cost of the property, plant, and equipment. The cost of the PPE can be measured reliably. The cost of the PPE can be measured reliably. What do they mean? You already know the cost, you already know the useful life, you already know the scrap value. So, measuring the cost, even if they ask you, at the end of 5 years or 10 years, what will be the cost of a bus and a link bus? The accountant should be able to tell the investors or stakeholders how much this bus will be. So those are the two. Please get them from here and the rest of your life. Still, you are going to find these ones on level 2 under financial reporting. You will find them on level 3 under advanced financial reporting. Still, you can use them in your day-to-day work, wherever you are employed, even in your business. So those are recognition criteria. We are going to look at measurement. How do we measure these assets? Measurements of property, plant, and equipment. Measurement of property, plant, and equipment. We are going to say there are two methods. There are two methods of measuring. There are two methods of measuring the value of property, plant, and equipment. So one is initial recognition. At initial recognition, in bracket cost model. At initial recognition, in bracket cost model. The second one is at subsequent recognition, in bracket revaluation model. At subsequent recognition in bracket, revaluation model. Therefore, at this stage, we only consider or use the cost model. So we are not going to look at revaluation model because it's not examined. But under financial reporting on level 2, you'll see there examining revaluation under IAS 38. So therefore, we are going to look at the cost model. Cost model. Under cost model, we write components of costs of PPE. Components of cost of PPE. This is also a most tricky question whereby you reach in a question, you find they first tell you to determine the cost of an item before they tell you to depreciate it. So components of costs, one is the purchase price less any trade discount. Purchase price less any trade discount. Purchase price less any trade discounts. Secondly is import duties and direct taxes. Import duties and direct taxes. Third, any cost incurred directly in bringing the asset into its useful life. Any cost incurred directly in bringing the asset into its useful life. Lastly, initial estimate of unavoidable cost, initial estimates of unavoidable costs of dismantling in bracket assembling and after brackets and restoration site.
I beg your pardon, from avoidable costs.
And avoidable costs of dismantling in bracket assembling after brackets and restoration sites. Those are inclusions of things that you must include under the cost. Okay?
And restoration, what?
Site. Okay?
Yes.
Okay. Let's write. Items not included in the components of costs. Items not included in the components of cost. One is startup costs. Startup costs. In bracket, pre-production costs.
Pardon, sir?
Startup costs in bracket, pre-production costs. Okay.
What is the subheading?
Items not included in the components of costs. Or you can say exclusions from components of costs. Items not included in the components of costs. We are together. One, we said startup costs, in bracket, pre-production costs. Secondly, is administrative and general expenses. Administrative and general expenses. Lastly, is the initial operating losses. Initial operating losses. E.g., negligence costs. E.g., negligence costs. I think you normally hear that accountants have made shortages. So in accounting, any mistake, you pay for it. In case you do a mistake, it will not be for the company, because that's the reason why they employed you, to correct these mistakes. So in case you find any mistake, when you reach level 2 under taxation, you'll see these mistakes, and the accountant went on to reduce them as operating expenses. When a taxman comes, they have to add back, because in accounting, we don't consider these negligence costs. So that's so far what we shall consider under this topic. Another subheading: accounts prepared, accounts prepared, accounts prepared, accounts prepared, under disposal of plant, property, and equipments. Accounts prepared under disposal of property, plant, and equipments. Okay. Are we together?
Yes.
One is non-current assets account. Non-current assets account. Non-current assets account. Non-current assets account. We are going to write this account records the total cost of an asset on the debit side. On the debit side. On the debit side. And it is reduced, and it is reduced, and it is reduced, and it is reduced, and it is reduced by disposals, and it is reduced by disposals of assets on the credit side, and it is reduced by disposals of assets on the credit side. A note under this account: note, no any depreciation would be recorded or posted under this account. No any depreciation will be recorded would be recorded or posted under this account. That is not one, not two. All assets are disposed, all assets are disposed of on cost. All assets are disposed of on cost. So that is a non-current asset account. So sometimes you reach on your workplace, they tell you to prepare an asset register. Then you hear someone calling friend, they told me to prepare an asset register, I even don't know about it. So at the end of this topic, at least all of us, we've seen from inventory how we go on to do inventory preparing the stock cards, how you're going to measure, how you can determine gross profit for your bosses, not even for examination purposes, but for our personal benefits. Also under inventory, under depreciation or disposal of non-current assets, at the end, all of us should be able to prepare an asset register and depreciate assets accordingly. The second account that they normally ask is the accumulated depreciation account. Accumulated depreciation account. Accumulated depreciation account. You are going to write this account records the total sum. This account records the total sum of depreciations of an asset, the total sum of depreciations of assets all over a given period. All over a given period. It records the total sum. It records the total or sum of total or sum, not the total sum, total or sum of depreciations of an asset over a given period of time. So under accumulated depreciation, we are saying that every depreciation for the year, we keep on adding it in that accumulated depreciation until we get the reaccumulated depreciation or the current accumulated depreciation in the current year, as we are going to look at it. It is increased by crediting. We are continuing. It is increased by crediting. It is increased by crediting. It is increased by crediting. The depreciation is computed. It is increased by crediting. The depreciation is computed. It is increased by crediting. The depreciation is computed, and it is reduced. And it is reduced by debiting it. And it is reduced by debiting it with the total depreciation, and it is reduced by debiting it with the total depreciation of a disposed assets. Of the disposed asset. It is reduced by debiting it with the total depreciation of the disposed assets. So, disposal sometimes might mean deleting. You delete this item totally out of your books. You remove it from accumulated depreciation. It's depreciation. You go to asset, you remove it because it's no longer anywhere in your books. So that is the second account they will ask you under this topic. The third account is disposal of assets account. Disposal of assets account. Disposal of assets account. We are going to say this account records this amount records the cost of a disposed amount, or that the cost of disposed asset. This account records the cost of a disposed asset. The cost of a disposed asset. On the debit side, on the debit side, on the debit side, on the debit side, and it is credited by, and it is credited by.
Pardon, sir. I'd like to repeat for me that sentence, the disposal asset account.
This account records, this amount records the cost of the disposed asset. This account records the cost of the disposed asset on the debit side. On the debit side, and it is credited by, and it is credited by, and it is credited by the sales proceeds of an asset, and it is credited by the sales proceeds of an asset received in the bank account, and it is credited by the sales proceeds received in the bank account, comma, the accumulated depreciation of the disposed asset, the accumulated depreciation of the disposed asset. We put a full stop. Continuation. This account is mainly prepared. This account is mainly prepared. This account is mainly prepared to determine if the company has made a gain on disposal or a loss on disposal. Has made a gain on disposal or a loss on disposal. Has made a gain on disposal or a loss on disposal. That is the account number 3. Our last account, which is an unusual account and it's not normally asked, is the bank account. We all know what the bank account does. So the last account is the bank account. We are going to say this records The amount received from the sales proceeds, this records the amount received from the sales proceeds on the debit side, on the debit side, on the debit side, on the debit side, and credits any payment made, any payment made, any payment made, and credits any payment made in any payment made in ascertaining items of property, plant, and equipment. In ascertaining items of property, plant, and equipment. We are together? Yes?
Yes.
Oh, sorry, someone was asking here some questions and I could not go on to them. So, those are the accounts we are going to look at. Another small subheading, methods of determining depreciation. Methods of determining depreciation. Let me share my screen. Methods of determining depreciation. People have started moving out. I don't know why. Methods of determining depreciation. So at this level, we are going to look at only two examined topics and the techniques they use. So my method number one, let me write it even here, methods of determining depreciation. Method one, we are going to look at the straight line method. So under this one, we are going to say straight line method. Here, the more thing is to look at cost, whereby I've already given the definition, minus the scrap value or the residue value, whereby I've also given the definition, divided by useful life of an asset. So this is the straight line method. Example. You say John investments on investments, acquired the following assets in maybe 2022. They tell you the year starts on 1st of January 2022. So when they tell you this, you already know when the year ends. They tell you purchased a machine for milling at UGX. Let's say maybe 15 million. This is an example. So they tell you it is estimated to work for 4 years, and after which it would be sold at maybe, let's say, 500,000 UGX, 500,000. They tell you other costs incurred in bringing this item into use are as below. One, they tell you installation costs of maybe 400,000. They tell you refundable taxes of 300,000. They tell you of non-refundable taxes of 100,000. Another thing, let's stop maybe if they are these ones. Then from here, they tell you required. Required, compute the depreciation for a machine using the straight line method. Are we together?
Yes.
Hello? Are we together?
Yes.
Yes, please.
Okay. So what we do, you look at our question. They are telling us required compute accumulated depreciation using the straight line method. We said, so long as you already know what the information needs, it will be simple for us. One, what do we do here? We first do cost determination of so we are saying cost that we do, we start with the purchase price. How much is our purchase price? 15 million. So we come here, we our 15 million. We add other costs. Involved to bring an asset into use. So here, what are these? Let me first bold this. So we look what are these costs. One is installation cost. We are going to add it here, which is 400,000. We have refundable taxes. Refundable taxes, these ones we are not going to consider them because it is like VAT claimable. You can go on to claim these taxes and URA will have to pay you back for these taxes. So we don't put it on the cost of a machine. At the end, we are to get it from URA. So we don't take refundable taxes. So what we do, we shall take non-refundable taxes. So non-refundable taxes over how much? Over 100,000. Do you have any other thing? No. What we get is the total cost of machine. The total cost of our machine will be equals to this plus this plus this. It seems simple when we're in class, but in an exam, if you've not got it in class, then it will become hard. From there, after determining the cost of a machine, what do? I go on to show that depreciation under straight line I show the examiner the depreciation under straight line is equal to the cost minus scrap value so minus scrap value divided by all. We are dividing it by useful life. So what we do, we already know our cost, which is 17,500,000. We are going to less our scrap value. You see here, our scrap value is 500,000. So I come here, I put my 500,000. We divide by the useful life, which is how many? 4 years. Therefore, my depreciation here would be equals to let me put it here. My depreciation will be equals to 17 minus this. You can put them in brackets. Divided by 4 years. So we are seeing that our depreciation for a year here will be equals to 4,250,000 shillings. Are we together?
Yes.
Okay. We are going to write here that under this method, depreciation is the same all over the years. We are together?
Yes.
Okay, so this we've said depreciation is the same all over the years. They are telling us that this machine is working for 4 years. Which are our 4 years? For example, here, if we are looking for our accumulated depreciation, our accumulated depreciation here, we are going to have 2022, 2023, 2024, 2025. Depreciation is the same all over years. Here it is this one. Also up to these years. It is this, it is the same. So you see, when we get the totals, we get 17 million. This means that at the end of the 4th year, this machine will be at a 0 depreciation. That's why I told you at this level, we stop from here. But under level 2, under financial reporting, we can say, no, this machine is still working, and we provide a room for revaluation. So that is how we'll go on to do anything concerning the straight line method of depreciation. Any question about straight line? Hello?
No.
Are we at par? Are we good to continue?
Yes.
I'm hearing only who?
Hello?
Okay, it's fine. We continue. So that is
Sir,
how, yes?
is there a scenario
Mm,
when we are using the straight line method where we're supposed to say maybe we get the cost times the rate, when we're supposed to use the scrap, when we are not supposed to minus any scrap value?
Okay, let's also look at it. For example, but in case of this question, they will have to say that because when you see scrap there, it means you'll have to use this method. But let's look at a scenario in case they tell us to use depreciation rates. Okay. So if they tell us to use the depreciation rate, they will tell you that any or a machine depreciates at 20% on cost. Cost means straight line. When you see they tell you on cost, just know it is a straight line. What do we do here? Still depreciation will remain the same all over the years. What we do here, we shall get, now here we shall not take depreciation, this scrap value, but rather we shall get 17. For example, if we are computing depreciation of 2022, it will be equals to 0.2 times the value of a machine, which is how much? Which is 7.5. So you see here, when we use, if you are given a rate, it is changing to 3.5. When you come to 2022, 2023, still it will be the same, 0.2 times 17.5. Sorry. Equals to 0.2 times 17.5. You see, we still get 3.5. So when you see here, this one in 2 years is 7 million. But look here, in years, it was 8.5. So it will depend on the way how the question will be asked. So if it is using the depreciation rate, we say, in case they tell us to use the depreciation rate, we say we use the ascertained cost. Ascertained costs we use the ascertained cost multiplied by the depreciation rates given. So in case you are given a percentage, you just get the certain cost that you've got times the depreciation rates given. Hope Kyla here have answered you. Okay?
Yes. Thank you.
Okay. So that is the straight line. They will either ask you to do using the scrap value, or they will tell you to do using the depreciation rates. Still, let's go to our method number 2. Method number 2 is reducing balance method. We say under this method, depreciation computed is different all over the years. We continue. Also, the depreciation in the first year is higher compared to the depreciations of next years. Are we together? Yes?
Yes.
Yes. Under this method, depreciation computed is different all over years. You'll find that in the first year is 7 million, second year 6.5, third year 5.5, like that. They are telling us that also the depreciation in the first year is higher compared to the depreciations of the next year. So we are going to look at this one. So under reducing method, we are going to say depreciation equals so here we are going to look, in case you are given, again there are two scenarios: scrap value, then you're given, so let's put here depreciation when given scrap value. I'm writing. Use the straight line method in the first year. That is our note number 1. Secondly, start using the reducing method in the next years. Are we together?
Yes.
So here we are going to look at this one. I'm not please going to repeat the computations. If you've asked the same question here, compute depreciation for the machine using using the reducing balance method. Please, in the first year, go on to compute it in this way. Are we together?
Yes, sir.
Yes.
So in the first year, compute, and you show that the depreciation in the first year is 4,250. When you come to the second year, so me here, I'm going to start on the second year. So in the second year, my depreciation will be equals to the cost minus accumulated depreciation, then we divide by use full life. Are we together? Yes?
Yes. Yes.
Okay. Look here. The cost in the first year, it was, we got 17,500,000. My accumulated depreciation, I've told you it is the total depreciation. So our total depreciation at this moment, it is 4,250,000. We are going to divide it by how many years that are remaining?
3.
3 years. Are we together?
Yes.
So when we come here, it means we are going to have our brackets, which will be this minus this. We close our brackets. We divide by 3 years. So you see what I'm getting. Are we together?
Yes.
So let me put commas. So this is what I'm getting. This is my depreciation in 2023. You see, in 2022, I got 4,250. In 2023, I'm getting 4,416,000. Let's go to 2024. Under 2024, we are going to get brackets. We get the 17.5 minus So under 2024, we are going to get 17.5 minus 4.250 minus this one. We get this. Are we together?
No,
I'm
sir,
getting
pardon.
17 minus my accumulated depreciation first. Are we together?
You're getting the 17.5,
Mm-hmm.
the accumulated
Minus
depreciation.
this accumulated depreciation, this one and this one. Total depreciation for 2 years.
Yes.
So the total depreciation for 2 years, it is this one and this one.
Yes.
So we get 8833, then 333. Are we together?
Yes.
Then from here, after getting this, we get this. Sorry. So after this one, we are going to get this divided by how many years?
2.
By 2.
So I think we are getting the same thing. Is it?
But why are we adding the 2 depreciation?
What?
Why are we adding the 4,250 plus the 4.160?
No, that 4,250 and 4,616 is the total depreciations. We are together.
Yes.
So the depreciation for over the years, when they tell you to use the reducing method, we go on to add depreciations all over the years. For this question, we shall look maybe in the next class, because I'm seeing time is going. We shall look in November 2019. November 2019, I think, was it question number? Let me first check it, then after we finish our class. Yeah, November 2019. Question number, was it the last question? I think you see it here. Question number 5. They are telling you to distinguish between the straight line method and the reducing balance method. You give definitions. They are asking you and explain circumstances that determine whether to use straight line method or the reducing balance method. Are we together? So here, in case you're given, under what circumstances will you use the straight line method? We shall say in the first year, when you're given the scrap value, you will get the cost minus the scrap value divided by the useful life. So in case you are given accumulated depreciation, that's when we shall use the reducing balance method by getting the cost minus accumulated depreciation times the percentage given. So you look at this one, they imported a machine at 56 million. We have the trade discount of 5%, we shall see it. We have taxes of 23 million. We have transport costs. We have pre-production costs. I've already given you these ones all, if we are to add them or not add them. So the pre-production costs, we said, we don't add them there. Then we have the installation costs, then other costs involved. They are saying that this included in the installation is 1.2. So when you come down to the required law, they are telling you to do an asset account, accumulated depreciation account, and disposal account if GM Limited depreciates the machine on a straight line using a rate of 10%. Then accumulated depreciation and disposal of account using the reducing balance at 25%. So I would request you go through this question so that next time when we come, at least everyone has a hint and we see how we shall go on and finish depreciation. I don't know if we have time and we meet maybe during this week and we complete the depreciation because time is going. I don't know what is your suggestions. So I hope for today, let's stop from here. Next time we meet, we shall do our number 2019, question number 5. I think let's check if 2021 there was another question for depreciation. Yeah. So we shall do these two questions. 2019 question number 5, then 2021 question number 5. Are we together?
Yes.
Yeah. So can we fix a class in this week? I don't know what is your schedule.
Which date in particular? Which
That's why I've asked you.
tomorrow?
So we do tomorrow.
Tomorrow.
Okay. So let's meet tomorrow at 6, sorry. At 6, and we complete the depreciation. Next week, we are starting on manufacturing account. So we are soon remaining with some few topics. I think we finish, because when I finish manufacturing, I will do non-profit organization. I do partnership, and I think that will be the end. Okay. So yeah, we meet tomorrow at 6. Maybe if there is any other thing on inventory before we close. Macarena, can we hear from you? She has gone. Oliver, anything in the inventory? Oliver? Okay, Maggie, anything in inventory? Because yesterday you were like the network was disturbing you. Maggie is not answering. Nambi, anything in inventory? Any query?
Not yet.
Okay, what about among Nancy?
For now, no.
Okay. Then Kaira?
So for now, no.
Okay. Have a blessed evening. Thank you.
Thank you. The same to you too.
Thank you. Good night.